Today we're going to be talking about range dynamics. So, what is actually range dynamics? The market makers do not move price in a vertical way always, as it's not wise and it's not possible as well because of the amounts traded. Range equals generation of interest. You will never find a market consolidating forever. When price is in a clear defined range, breakout traders are waiting for a break to the upside or downside. That is why the first breakout of a range is usually the false one to trap them. So the market is always in two states. Remember that. The market is always in two states. The market makers have to keep the market flowing in two states at all time, in a range and in a trend. Every consolidation leads to an expansion. So here is a actual step-by-step guide. Draw out your high and low of the range. Locate a 4-hour/1 hour key level below or above the range. Wait for one end of the range to be purged or souped at a key time while testing the key level. Wait for price to displace back into the range. Look for a clear price displacement indicating a return into the range after liquidity is taken. That's your step 3. And find your lower time frame entry model. Either another block, breaker block, mitigation block, your rejection block, any one of your choice. So here is just some illustration here. You can see your higher time frame on the left, and you can see your inside bar candles. Here, one side of the range was pushed firstly. Then you can then go to your lower time frame and look for your lower time frame model to target your opposing side of the range. So here on the lower time frame, this is just an illustration. You got your lower time frame order block and all of that. Higher time frame key levels are the springs that produce lower time frame expansion. What this actually means is that you need your higher time frame to be actually able to work on the lower time frame. Wait for one end of the range to be pushed or souped at a key time while testing the key level. Here are some higher time frame reversal patterns: the mother and the children, the classic 3 candle, delayed protraction, and your long wick. So here are some diagrams. You guys have this PDF and you have gone through it before. I'm just trying to make a video on it, and I'll still go to the live chat. So here you got your range. The market pushed one end of the range, taps on the key level. This key level was actually a mitigation block on the higher time frame. To your lower time frame, you got your total soup, retracement into your order block aligning with your breaker block before going higher. So here on the 4-hour time frame, you see the mother and the children pattern. Market takes one side of the range, and you can see that clear eye, like you can see that wick indicating bullish reaction to the upside. Remember step 3. What's step 3? Wait for price to displace back into the range. Look for a clear price displacement indicating a return into the range after liquidity is taken. So you can see here on the step 3. Then here on the lower time frame, you got your order block and your breaker block and your second leg of expansion, OT/keys of death. We haven't actually talked about that, but we'll be heading there very soon. And Yeah, it's just basically how the market generates liquidity through insert interest. Accumulation of buy side and sell side liquidity is also the market taking breath before the next move. So range, trend. So here are some rules: buy low, sell high, preserve capital by having a model that teaches you when not to trade. Don't buy the range high, don't sell the range low. Do the opposite. Target 1, 50% of the range. Target 2, opposing end of the range. And rule 3, always take partials at 50% of the range. Never participate in the middle of the range. Never. Rule 4, when you're bullish, don't enter at once. Wait for a pop above an old high. And when you're bearish, don't enter at once. Wait for a dump below an old low. So these are actually some of the daily candles. So 1 and 2 are just basically for, one is just basically for the buy side, buy the classic buy day expansion, and 2 classic sell day dump lower. And 3 and 4 basically consolidation on the daily time frame. Those candles are above are the daily time frame candles. And 4, 5 and 6 are for reversals from a key level or during a key time. These candles can also be the 4-hour open high low close and also the daily time frame open high low close. So down to the charts. So here on EURUSD, we got our mother and children candle pattern. So mark out your range and wait for the market to take one side of the range and look for a clear indicator that the market will actually want to go lower. So here is your indicator. It took the range high here, then close back into the range. What will be your next target? Your range low. Remember the daily buyers video. So let's go to the lower time frame and see what we got. So here, range high swept. Remember, consolidation is actually generation of interest. So here, range high swept, retracement, first leg of expansion after sweeping range high, then retracement into this order block, and also here as well you got a little consolidation, then you got another order block as well, then you got your retracement into the last order block, then before your second leg of expansion. So range trend here. Let me show you guys. So here is the range, and here is the trend. So here is the range, generation of interest, and here is the trend. So as a trader, you to participate only on expansion conditions. Don't participate in a ranging profile or you're gonna lose a lot. So focus on expansion profiles only. So So you can see the picture clearly. You got your ranging profile, takes out the higher time frame, range high, daily time frame. Took this out on Monday. Then here, expansion lower, ranging profile, takes a breath. Then trending profile, expansion lower. So that's that for this price action. Let's go to the next price action. So you can see the mother and the children higher time frame pattern here, over here. So let me go to another example. So same thing here, your mother and your children pattern here. So remember I told you CRT highs and lows can be used as key level. Remember the CRT low, boom, that's your key level. So here, ranging profile equals your generation of interest. Don't enter at once, wait for it pop above and hold high. So here, takes one side of the range, taps on our key level, shows a rejection and closed back into the range. Will be your target, your range low, opposite side of the range. So let me say you wanted to trade this candle, final open, high, low, close to the daily range candle. So let me just put this quickly, or let me use the one above this open, high, low, close, then take it down to the range low. So here on the 1 hour time frame, so we got our range high, swept first with this move. Okay, range high swept. So first leg of expansion, your range, and your trend. Range, trend, range, takes a breath. Let me make these different colors. The open, high, low, close of the daily time frame will be pink. That way we can actually differentiate what we are trying to say here. So range, trend, and you got your range again, then you got your trend. So the market won't actually just keep on expanding and expanding and expanding. It needs to take a breath. Consolidation. That's just basically the market taking a breath. So here, let me mark our opening price of Tuesday, sorry. Here we got your Tuesday 12 a.m. opening price here. Making this orange, and here this was Wednesday, and we got our Thursday opening price over here. Sorry. Supposed to mark the open candle of this and the opening candle of this, because that's our opening price. So here, taking this off and also this. So here we got a ranging profile first. Here got a ranging profile, took our higher time frame, daily time frame range high first, and tapping on our key level, then sweeping this high, then closing back into the range. You got your long wick and expansion lower prices. Then range, you got your turtle soup, and you can see how price went above the midnight open here. That's this orange icon here. So you got your open here and your high here. Remember, sell above the opening price, so you can cash your second leg of expansion here, selling here, and you can see that same reversal pattern here, long wick, same thing that was here. So you can position yourself here for shorts, and you got your second leg of expansion with this move lower. Here you got your turtle soup, which is your kiss of the turtle soup, and your manipulation above the midnight open, then before going lower to our final draw on liquidity. So that's how you actually use range dynamics. So let me give another example where SMT is actually involved. So here, this was Monday's ranging candle. Tuesday did not actually take Monday's high. Why? We got an SMT with GBPUSD. GBPUSD took Monday's high and formed a long wick reversal pattern before displacing lower on Friday to Monday's low. So let me decipher Tuesday action first. So here, pop above your old high, then you got your first leg of expansion, range, manipulation, trend, range, trend. That's for GBPUSD. Going into Euro USD. Euro USD did not sweep Monday's high on Tuesday. So we got your SMT, and this is actually the weaker pair. So you have to trade the weaker pair when looking for shorts. So that's that. Let's look at some more example over here. Here You got your classic 3 candle pattern with your long wick, bullish rejection sign. Takes one side of the range with a long wick closing back into the range, equals a big bullish expansion for the next day, which is Tuesday. So you can see why most of the time I focus mainly on Tuesdays and Thursdays. Tuesdays, Wednesdays, and Thursdays. So here you can see these clean highs. Remember what I actually said about clean highs. There are strong draw on liquidities for buy sides. So here, starting with the range profile, range expansion, range trend, anyway you call it, and range and trend. So this is your second leg of expansion. So range, don't trade the range. Trend, trade the trend. Range, don't participate in the range. Trade the trending markets. So if you missed the first leg of expansion, you can wait for the second leg of expansion. Remember, when bullish, wait for a dump below an old low before you start looking for buys. Don't say, oh, the market is just going higher, I can enter from anywhere, let me enter from here, or let me enter from here. Yes, this is another block. Wait, let me enter from here, this is another block, and put my stop below here. The next day, what happens? Tuesday, dump below this low, wicking you out. So don't enter at once. Wait for a dump below an old low before you start looking for your buys. So that's for this price action. See, same thing here, your classic 3 candle pattern, and you see this long wick closing back. It's kind of similar to this, but I prefer this kind of rejection than this, because this candle is actually an indecision candle. So yeah, Fridays, the candle range. Monday swept Friday's high. Tuesday expands towards Friday's low. And you also got another candle range here. Sweeping this low, close back into the range. Target opposite side of the range. So that's basically all for range dynamics. So this candle will be a consolidation candle. Remember that last part on the PDF, number 3 and 4, something like that. Let's check this day out. So you can see this day, this was Monday. Monday first went lower, went higher, went lower again, then where's the end of Monday? I think this is it. Okay. This was Monday's low. Went lower first, went higher, went lower. So it's basically a indecision candle, or you can call it a consolidation candle. So you can as well check out the rest price action for yourself. Remember the two states: range, trend, range. The cycle always repeats.